Let's talk some stocks with Diane King Hall. Chipotle with some love this morning. Diane, Morgan Stanley with an upgrade. Stock looking pretty good after closing out at 53 bucks last week. We're at 55. Kind of was in need of a bounce.
It was. It's certainly given its performance a year to date. So Morgan Stanley becoming more constructive on Chipotle this morning, upgrading it to overweight. They've got a new price target of $70 a share. The previous price target was $65. So in terms of where it finished on Friday, that suggests about 30% upside from there. The analysts saying that quality large cap growth compounders see some slowing with the stock flat to 12 months ago. He says what's not to like. We've always appreciated CMG's strengths and think many are set to continue. An entry point, this is a quote, has presented itself in our view. So that's around some of it. And then what else came up in the note from Morgan Stanley? CMG is probably the best combination of an on-trend brand, existing scale and incremental tech bets, both equipment and software. So this is a bet they are saying also on the technology that in combination, this is a quote, could be powerful to drive margin or offset inflation, which in turn protects the ability to underprice competitors. It's interesting that they made that note because Chipotle also came out and said they would absorb any costs related to tariffs. So that suggests that they're not necessarily intending to pass off those costs to consumers. Yet, even given the context of those comments from executives over at Chipotle, and even in the context of this note, which, from Morgan Stanley, they're seeing that they'd be able to offset any inflationary concerns. You are still seeing shares move higher by up more than 2.5%, Oliver.
All right, finding support at 52-week lows. Chipotle definitely got a little bit more competition out there these days, with Kava kind of stealing the show a little bit as far as the market valuations go. But with Kava pulling back so hard off its highs, maybe some attention due to shift back to Chipotle. In terms of consumers, one note from Deutsche Bank this morning. Downgrade on Dollar General. Stock's been in a rut big time. I kind of wonder how the story ends for DG. They need something to go their way pretty soon.
Yeah, and consensus is really a hold on Dollar General. It's really faced some troubles, especially when you recall they called out their consumer flagging. So Deutsche Bank latest to be less constructive on Dollar General. They've downgraded it to a hold from a buy. Still, they've got an $80 price target on it, so that does suggest some upside from here, single-digit percentage upside, but still, they're not completely throwing the baby out with the bathwater, but that is down from their previous price target. Their previous price target was $90 a share. They talked about the sales. They said that, quote, remains soft. They also called out, quote, lagging e-commerce presence. They said that's a growing concern in an increasingly digital and convenience-focused retail landscape. So that's the concern, the competition and also pricing pressure. It is interesting that they called out to me the e-commerce component, because you don't really think of Dollar General that way, and the consumer base that they have, you don't think of them necessarily looking for digital options for Dollar General.
Yeah, I never associated that with them. When I go to a
dollar store, whether it's a Dollar General or whatever, one of the dollar stores, yes, exactly. When I'm going, I'm just going for, one of those like pans that you cook something like those throwaway pans or whatever. So I'm not looking to buy that online. It's a quick, I'm probably not their usual consumer, but any consumer that's going there, you're not looking for the digital option. So that's the one thing I would say in this analyst note that doesn't make sense.
That doesn't resonate with me either.
No, but the sales softness, that does make sense, especially even in the context of the comments, the conservative comments that we have from Walmart. I mean, you saw many of the retailers take a leg down off of that. Dollar General does have earnings coming up March 13th, so the sales numbers will be something to watch.
All right, pressure's on. At least the Dollar Tree chart looks the same, basically. It seems like the math for dollar stores just doesn't really add up in the year 2025 or 2024, really. Last one, Diane, Southwest, little changed, but a full-on downgrade here. Tell me about it.
It is. It is. But interestingly enough, you called out that it's little change. It was lower in the pre-market. So Southwest getting hit with a downgrade over at JPMorgan Chase. They've lowered their rating to underweight from neutral. They're keeping the price target. They've got a price target of $25 a share. Essentially, JPMorgan Chase saying its best days are behind it. They said the best margin, return on invested capital. Quote, days lie in the past. Excuse me. We know that Southwest has been undergoing some change after some activist investor activity around it from Elliott Management. They've put into effect some of that change with changes to their boards and top leadership. They're trying to cut back on profitable routes and reduce costs, but JPMorgan Chase now less constructive on Southwest.
All right. Well, I guess the market is not impressed, not scared of the language. I mean, it's outright sell rating, so it's pretty, pretty bearish. Barron's got a whole write-up on it, but market's just doing fine. Appreciate it. Thanks, Diane King Hall. Good stuff.
All right. You got it.
Host of Morning Movers.